Hey guys, welcome back to my channel. Hope you guys are doing good, feeling good, smelling good, because right now I know I am for it. I'm smelling pretty good. So I'm very happy doing this video because you know what? Because just like I said in my previous video that I will be doing a strategy breakdown of how I usually enter the market. That's what I see in the market before taking the trade, and I'm actually doing the video for real. Like I kept to my word, man. Like I kept to my word for look this big win because you guys don't understand. Like I kept to my word for you. So I'm gonna do like a breakdown where I'll show you guys how I actually take a trade, what I see in the market, or the confluences that actually make me to take a trade. So mind you, this strategy is not it's not the holy grail strategy. It's not that strategy which you go all like put all your money, because you will definitely lose it. You will definitely lose it if it goes against you. So this strategy is just it actually surrounds a series of strategy, because it's not like a pure price action, which it has. Yeah, because for you to trade this strategy, you need to have a like a broad knowledge about pure price action, that's market trend, consolidation, and all of that. So you need to know when price is trending, when price is ranging, and when price is about to move before you can actually trade this strategy. So good thing that I'm here, and I'm going to make sure that I put you guys through on everything, because I'm actually using Fibonacci, I'm using trend line, I'm using zones, I'm using all of that, because I tried trading SMC. Like the circumstances that surround SMC was just too much for me to grasp, so I let it go. I tried trading pure price action, which I'm doing, or should I say I tried trading support and resistance, but I switched. Alright, so when I found out that when I back tested this strategy, like a lot of sleepless night, a lot of grinding, I discovered that okay, it's now time for me to stick to it. Whether I take profit or stop loss, I am going to stick to it. Instead of me to change it, I'm going to refine it to what actually suits me, or to what actually suits the current market condition. So guys, now let's jump to my screen, but before then I have a big question. Hope you guys are smelling good. So now let's go to my screen. I'm also on what's it called, on a trade on BTC, and oh shit, goddamn, it's looking pretty nice right there. So I'm on the trade on BTC on the 5k account, and of course on the 10k account. I'm risking pretty heavy on this account because I don't want to be stuck in the in the challenge phases. Yo, it's my season, so I need to move as fast as I can. I need to push, because I've been here, I've been there, or should I say I've been there for quite too long. So it's now time for me to move very fast and very far. So now let me go take you guys to my screen. Let me show you guys what I usually see before taking the trading.
So you are currently on the Euro USD chapter. I'm not going to get involved with that just yet because I want to explain something to you guys real quick. So price move in a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and all of that. So if you see price moving like this, it means that price is currently bullish. Alright, see price moving like this means price is bullish. And if price is bullish, all what you will be looking for as a trader is buy. Alright, so you look for buys on a bullish market condition, while I look for sales on a bearish market condition. So as you can see that if price push to the upside, it pull down, you push up and pull down. So this is where you enter. You don't enter on a push to the upside, enter on a pullback to move the market in to the upside to maximize the profit. Whereas also on the bearish market condition as well, you also do the same thing. Price move in a series of um, higher lows, lower lows. And that's how price change market conditions. It's no longer higher highs, higher lows again. Now it's now um, lower lower high, lower low, lower high, lower low. Because this low is higher, because it's high, it's higher than this low. This becomes a lower low, and this one becomes a lower high. This signifies that price is trending to the downside, and we should be looking forward for sales. And we see price moving like this, that, this. There's nothing going on. This is what we call consolidation market. Price is just moving with no valid destination. So you cannot trade this type of market condition because it actually gets you stuck. It won't make you money, or rather, it actually give you hope of giving you money and eventually move to one of the direction that you did not expect. Right? So this is the type of market condition that you should stay away from. So you only trade this type of condition when price is trending to the upside. That's when price is bullish. The type of market condition is we trading, and when prices, of course, bearish, you only trade this type of market condition because if price is bearish, you only look for sales, and if price is bullish, you only look for buy. But if price is being caught in a trap like this, moving in sideways manner, which means you should also avoid the market at all costs because you wouldn't know when price is gonna hit next. Most times it might be like this, then head to the upside, or move as if you want to go to the upside and eventually it drops down and take you out on stop correct. And make sure that you avoid this type of market condition because it will cause you more harm than good to your trading account. So that is mind you that all this it looks pretty here on paper, but if you go over to the market condition, you go over to the pure or to live market condition, you're gonna get like a type of different type of price action because in paper it looks kind of very clinical, you can see price moving accordingly, but go over to the price, you're gonna see something very different and maybe intimidating, alright? But it's still the same thing. It might not be as perfect as it is right here on paper, but it's still gonna make the same sense, alright? So inside all of this move, there are several types of candlesticks pattern, chart pattern that signifies the price wants to either move up or maybe pull down. Okay, so there are several hidden types of conditions hidden inside some of these joints. Alright, so that is what you will need to study yourself because I wouldn't want to make this video that long. That's why I don't want to go in depth with all of this. But for clarity, I want to leave a link in the description of this video. You can use that link and download the Candlestick Bible. Alright, so you can use that link to download the Candlestick Bible for free because the book was given to me for free and actually help shape my trading career. I'm also gonna give it to you guys for free as well. It's in the description of the video. You can use that link to download the candlestick type where you can study some of these chart patterns, some of these candlesticks pattern and all of that. But I don't want to go in depth because the video will be way too long. So whenever price gets to areas like this or like that or like this, you're gonna see some certain chart patterns or candlesticks or like certain reaction you might see head and shoulders, you might see cup and hand, you might see some certain things that actually make the market to either move forward, maybe to reverse, alright. So that's it on this video. Let's go back to the market now. Let me show you guys how I actually put all of this together before taking a true rate. As you can see here in the Euro USD chart, this is the 4-hour time frame. I use Fibonacci a lot because Fibonacci actually give me like my X is built around Fibonacci. So I'm gonna leave the what they call the measurement or the scaling of how my Fibonacci looks for you guys to copy and you can as well use it if you think the strategy is okay for you, if you think it suits you, you can as well use it. But I don't only use Fibonacci, I use it with the combination of pure price action, the combination of SMC. Yeah, I also do a little bit of SMC. That part where you guys see seek of liquidity. Yes, I use that a lot in my entry because it actually gives me precise entry. Whenever price is moving, I wait for price to pull back to my zone, and then I wait for like a liquidity sweep before taking the trade. Alright. So yeah, let me show you guys in on something. So this is the 4-hour time frame. So for the sake of this video, I'm just gonna do something real quick here from the 4-hour time frame. So we're on the 4-hour time frame. I want to get my feet to there. You can see this low, that swept this low. I mean, this is the lowest low before we get to this high. This is what I'm going to do. Or before we get to this, oh, if you haven't gotten there yet, I want to use this low as well this low before we get to this high. You feel me? So this is what I'm going to do now. Since I've grabbed my feet, so I'm going to draw it from here to this high. That high right there. See what I'm talking about? I'm also going to get my zone, and this part, this is the measurement. Let me just drop this here. So this is the measurement of my Fibonacci. So as you can see, we have 0, we have 0.5, we have 0.62, we have 0. That's 0.5. Let me take it to the side. So if you want to copy, you can pause this video now and copy some of the tools which copy some of the settings which I use for my Fibonacci tracements. Alright, I'm going to keep it right there as it is. Since you are looking for buys, since price is ranging to the upside, you see price is going up, so we should go looking for buys. So this is how I'm going to catch this buy now. Okay, since this low is lower than this low, then this low is a valid low, and this high is higher than this high, so this high is a valid high. I'm going to draw it from the, since you are looking for buys, I'm going to draw it from the bottom or from below to the top. I'm going to get my zone. This green area is where I usually take my entry. Yeah, I always take my entry when price gets to this level. So I want to mark that. I want to mark out the whole of that green level there. So this glass. Okay, I want to mark out the whole of the level like that. Mhm. Yeah. And now this Fibonacci, oh, this is to our service purpose. So I want to take it out just like that. Take it here. Now you can see that immediately price get here, price reverse. Immediately price get this time it sweeps, but it still comes back inside of the zone, and eventually coming in and sweep another low before actually heading to the upside. That's just the number one I want to show you. I'm still going to show you more clinical one, still on the 4 hour time frame. This actually works both on the 5 minute time frame, the 1 hour, and also the 15 minute time frame. This strategy is very effective, but it is not the holy grail strategy. You get what I'm saying? So each time price gets to this zone and I see that price sweep a valid low or a valid high, I'm always going in irrespective of the um direction which I'm aiming at. As you can see, price swept this low and tapped in beautifully, and price moved and came back again, and this time it almost like swept every, like, you get what I'm trying to say, it swept every stop that has been behind. This is price for you. You have to make sure that you're using a valid risk management strategy while trading this pattern, because price might eventually stop you out before getting to your anticipated direction, just like every other strategy. Yeah, there's nothing holy good about this strategy there. As you can see, price swept and eventually move up to this high. You can see it's a lot of highs. So now let's take another example, right? For me, I was able to say failed one, alright, because but if I want to trade this on a 4 hour time frame, then my stop loss is very, very huge. That's why whenever you're trading, use the 4 hour time frame to mark out where price is heading to, plus the overall market condition, and then you use your like 1 hour or 50 minutes to um make an entry. My stop loss would have been below here, but there is no way I'm going to keep my stop loss there. There is no way. I'll be targeting 1:3. You can see I always target this. So this would have been a stop loss trade for me, because there's no way I'm going to hold. This is the 4 hour time frame. There's no way I'm going to hold the trade for this long. That's a lot of time. Take this off. So now go over to like the let's say, okay, let's do another example because I've seen one again. I'm gonna get my feed too, and this time we're looking for buys because price on Euro USD is bullish. I want to get my feed too from this low right here. So let's go over to the 1 hour time frame, because I need to give you guys some very clinical example right here. So let's see. Mouse is way too noisy, but it's so good. Okay, I want to get my feed tool again and drag from, since you're looking for buys, if you're looking for buys, you use a Fibonacci tool from the down to the top. If you're looking for sales, You're gonna use your tool from the top to the down, and that's where you mark out the zone. This I want to mark out shortly. I drag it. You can see from this exact point. That's where you drag it from there to the upside. Okay, as you can see, and then again you draw your zone. Yeah, and now select the flip tool. Okay, I'm trying to say. So this is where the head and shoulders chart pattern come into play. If we go over to the 15 minutes, this is going to make a lot of sense because you're going to select the left shoulder, head, and right. This is the inverse head and shoulder. And let's go there for clarity's sake. Okay, where did it go? Where did it go? Where did it go? Where did it go? I'll find that shit. Oh boy. Since I moved so far fetch. Where are you? No, let's stick to the 1 hour time frame because I'm in the feed, so it's just I'm being limited to the amount of candlesticks I can see. So as you can see here, right from the 1 hour time frame, you can see like the chart pattern which signifies price about to move from bullish. This is the left shoulder, head, and right shoulder. I want to put my what's it called? So right there, once I see the formation of this, it's just the closure of the left shoulder, head, right shoulder. Once I see the bullish move, it signifies that price is about to start moving to the upside. I'm gonna do something like this, like that, and target 1 into 3. Okay, and this would have been a clean trade right here. Entry here, stop loss below, a little below this head here, and that's how I would have cashed it from the trade. Again, let me show you guys another example. This, and let's go back to a more detailed time frame. Let's see 15 minutes time frame. Let me show you guys because it is always there. It's always there in every chart. It's always there. So here now I'm looking for buys because we are doing what price is bullish. So we are looking for buys. I'm going to get my flip tool again from here all the way down to there, just like that. And then I'm going to mark out my zone, my golden zone, if I would say. That's my golden sweet zone, just like that. And again, I want to take out the flip tool because this Fibonacci tool has already served its purpose. As you can see, immediately price sweeps this area here. See this low? Price sweeps this low beautifully. Such price sweeps this. So you can find liquidity has been swept. Now it's not time for us to look for buys. Alright, since we drag a Fibonacci tool, which signifies buys, so we're looking for buys. This is like double bottom here, the downside. And once we see the formation of the last bottom, we'll be looking for highs on here, and stop loss will be just below there, below the head. And looking for 1 2 3. Beautiful. Right from the 15 minutes. This is like a daily. You catch this sweet trade right from the daily time frame. Inside, this is not gonna take like 1 week or days. This will take like instant because immediately we enter here. This is a 15 minutes candle. We enter this trade by possibly by 12 a.m. or the 12 p.m. all the way down till 3. The trade has already got into our take profit. We're going to move over to another example again. Like it keeps happening on and on and on and on and on. You can also look for sales. Oh, my Bluetooth is low. You can also look for sales. Okay, now let's see if we can get something out of this. So we get this flip to again. And this time we're not going to drag it here. I'm not going to start from there because you can see that price has already pushed up and comes back. So this is where you're going to use because price swept this high here. So you're going to use this low, this current low here. Going to use this low like this and drag it all the way down to the all the way to the upside. Then my Bluetooth is low. I need to summarize this video real quick. So you can see when we get our zone, our rectangle, I marked out the whole of this zone again. You can see how precise this one is. Come back. I'm gonna mark our guess the buy. Yeah, once you see this push, you have to wait for a valid sweep. So here, this should have been a sweep, but isn't the sweep, have to wait for like a sweep on this level here. Oh, not that. If you like sweep on this level, see how price sweep is here, and that's where we enter on the buy again. Since price is what ranging to the since price is moving to the upside, we're gonna enter and put our stop loss just below there, just like that. And target, yeah, you have to target big because you have a lot. It's a 1 to 5 target right there. And if you risk 1%, if you risk like a $20 here, you stand a chance of making $100 from this here, from this distance to this other distance. So guys, my ability to do lot of to show you guys a more detailed example on other pairs, not only euro USD. This always happens on most of the currency pairs, and including gold and of course BTC. But for some reason, my Bluetooth is currently low. I don't want to try to change or try to make some other changes. So guys, see you guys in my next video. I hope this video actually makes a lot of sense to you. And again, this is my Fibonacci level. You can also use this to put in your own fib tool in your trading view to give you that precise entry. So you can say you have 0.5, 0.6, 0.5, and plus 1. And copy this, or let's can pause this video and copy this is right here. This is my level. I uncheck every other box. We only have 1, 2, 3, 4, 5 boxes that I checked, and these are the settings on each of the boxes. So pause this video and copy this style or this coordinate to your own Fibonacci level and start making money for yourself. You have to always follow your trend. The trend is your friend, and also remember that your dreams are valid and you can also accomplish it with the help of forex trading. So see you guys in the next video. Bye bye.